we're going to focus on this candle here, last Friday's candle. We see that it made a new intraday all-time high, but it did not close with a new all-time high. Now, the last few times that it did that back here and here, they all led to a little bit of a pullback before it makes another new high. So we're going to take a look at it a little bit more in detail and see what the market is telling us. Will this also be repeating these pattern here in the past? So stay tuned. And if we take a look at the performance from the indexes, we see that the NASDAQ was the top performer. The NASDAQ 100 and NASDAQ Composite all gained more than 2%, while the S&P 500 gained 1.33%, with the Dow Jones Industrial 0.25%. The New York Stock Exchange Composite lost 0.5%, the Dow Jones Transportation 1.4%, and the Russell 2000 2.1%. And if we take a look at all the major indexes, you see that the only indexes that made a new closing high last week was the NASDAQ 100 and the S&P 500. See, all the other major indexes has pulled back from its recent highs. So you can see that the market is narrowing in terms of participation. And also, if we look at the individual sectors here, we see that the semiconductor was the strongest sector last week, along with the biotech and also the long-term bond. But look at all the other major sectors here. We see that the retail, oil, the banks, home builder, energy, and the miners are all negative, with the miner losing over 6% last week. So once again, we can see that the field of participation, or the sector participating in this rally, is narrowing as well. Now let's take a look at the sentiment here. We are looking at the VIX. You see the VIX is still in the low teen. It finished Friday at 12.22. But the put-call ratio is still hovering near this 0.75 range. So definitely the market participant are being a little bit cautious, although they are being a bit complacent here. And looking at the up-down volume ratio, we see that on Friday we did see a little bit of a sell-off with close to 3 to 1 in favor of the down volume, and also a broad market participation on the sell-off from the AD. We see that the daily advance, there are more declining issue than advancing issue by a margin of 1287, more declining stock than over the advancing stock. Now, also the other interesting thing is we are noticing that the new 52-week low is outnumbered the new 52-week high. Now you can see that the number of stock making new 52-week high has been coming down, although the number of stock that's making 52-week low has been relatively constant. And here, looking at the accumulated AD line, you can see on the New York Stock Exchange it's pretty relatively flat here, while the S&P 500 is making a higher high. Now, last Friday, I tweeted out to say that if you're a bull, you do not want to see the S&P 500 to close green. In other words, to close with a new closing high, while the AD line is moving down, because that would be a non-confirmed closing high, and that is not a good thing for the market. That could also be a sign of a near-term top, and we could see a major correction. So that's the reason why I was saying that if you are a bull, you want to see the S&P 500 to close negative. And fortunately for the bull, it did. And here we're looking at the NASDAQ. You notice that NASDAQ also put in an intraday high on Friday and also failed to close with a new closing high. Now, if we are looking at this up-down volume ratio, it's also 2 to 1 in favor of the down volume, and almost 1,900 more declining stock than advancing stock on Friday in the NASDAQ. And here, looking at the new 52-week high, 52-week low, we see that the NASDAQ, the new 52-week low, been outnumbered the 52-week high for the last couple of weeks already. And it is holding steady. It's just that the number of stock making new high is falling off, while the Nasdaq 100 is pushing into new highs. So that is not a positive sign. Doesn't show that there is internal strength to push this market higher or to justify this move to a high. And here, looking at the cumulative AD line in the Nasdaq, you see this right here is kind of coming down. It's a little bit of a falling off, really. And you notice how the Nasdaq 100 is actually putting a higher low, while the thing, on the advanced decline is putting a lower low in addition to a lower high. So this is a massive, massive negative divergence. And you could tell by looking at the participation, the market participation in the Nasdaq is really narrowing down to basically a couple stock and primary one stock, right? NVIDIA. So be careful about the tech sector. So as you can see, the internal is telling us that the market participation is narrowing, and also the breadth is a little bit more negative or weakening now based on the new high, new low. So got to be careful. Not saying that we're going to have a crash, but definitely right now with the sentiment and also the internal is telling us to be a little bit more cautious. Now let's take a look at the mini S&P 500 market profile chart here. Notice on Friday we saw a intraday all-time high. Now it did not finish with the any sort of or left any unfinished business on Friday. So what we're going to be watching is for the possibility of maybe a little bit of a pullback and come down and clear up some of these unfinished business and start working its way down to retrace some of these point of control, these naked point of control. Now, I wouldn't be surprised to see eventually for the ES to come down and try to fill this gap, and that's basically down here at the 5100 level. So who knows, right? I mean, there are a lot of major economic event coming out next week, and also a couple major corporate events. Right, first of all is the NVIDIA stock split on Monday, and also Apple, the WWDC. So we're going to get a keynote from Apple, and then on Wednesday we're going to get the FOMC interest rate announcement, and also Jay Powell's press conference in the afternoon. So those are key events that could move this market, and there could very well be a catalyst there to pull this market back. So just be careful and be aware of some of these levels and the possibility of where the market might, pull back if we see a little bit of a near-term correction. Let's take a look at the E-mini S&P 500 daily candlestick chart here. As you can see, we saw a little bit of a shooting star doji type of candle on Friday here, and we see that the market is pricing in for next week. The upper range is between 54.37.5 to 54.26, and on the lower range is pricing in 52.81 and 52.60. So obviously it is pricing in a possibility of a all-time high, but then also a pullback into this little bit of a volume gap here, this volume dent, also in the middle of this consolidation of the balance area here. So I wouldn't be surprised to see the market, the ES, to pull back into this LVN here somewhere around the 5174 next week, and possibly come down even down here. Remember this gap here that we could be coming down to this high volume zone here and fill this gap, and that right here is represent of let's see, using the Friday's close. And if we come down to this area here, to the gap here, we're talking about maybe 4.38 to somewhere around 4.75% of retracement. Now, if we come down here, this is 1.8%, and come down to this LVN, that's about 3.5% or so of a pullback. Now, looking at the SPY here, we see that the SPY closed with a little bit of a shooting star type of a doji or spinning top, whatever you want to call it. It did put in a new all-time high on an intraday basis. So in the coming week, the market is pricing in an upper range between 542.50 and 541.50, and the lower range is 526.60 and 524.50. So we're going to be watching those range there, but I wouldn't be surprised to see it pull back into this low volume area and then maybe chop around a little bit and then come down to this high volume area here and possibly work itself toward this gap here and fill this gap down near the 505 area. So that would be the downside that I'd be keeping an eye out for the coming week or so. And if it pushed to the all-time high, then I'll be looking for this upper range somewhere around this 542 area. And the first number is probably 540 would be a nice round number to target. But in either case, we'd probably be looking at the upper range if it is able to break through the all-time high. So be careful next week because, like I said earlier, we do have quite a few market moving event, and basically the Nvidia stock split, the Apple WWDCs, and also the FOMC and J Powell press conference afterward. So those are all market moving event. And right now, with the market internal showing a little bit of a weakness, we need to be cautious and be prepared for some sort of a pullback in the near term. So if you like this video and find it informative, be sure to smash that thumbs up to give it a like and also help promote this video. And if you are new to this channel, click the subscribe and help support this channel. Good luck on your trading and thank you for watching.